Hey traders, Raghee here, and in this recap video we're going to cover the NQ and a couple other markets that are sitting at significant highs but still are trading within the context of what we could consider to be a choppy or distribution or sideways volatile market. And I want you to keep in mind that this can apply to any kind of market in kind of an overbought, oversold chop. So the first thing you want to do is recognize the underlying trend. Despite the fact that there might be a new 52-week high or low, acknowledge the underlying trend. How easy is that? It's as easy as taking a look at the grab candles. Notice the blue grab, notice the blue grab, even the red. Gosh, you know, I talk about the break, the visual break of a trend. Now that doesn't mean an uptrend turns into a downtrend. That's not it at all. What it means is an uptrend turns into sideways range-bound chop. That's how effectively these grab candles can cue you into these transitions. So the next thing that we want to do is assess the way a market has broken to a new 52-week high. This is also a really important point in that when a market breaks to a brand new 52-week high, there's an interesting thing that can happen when that is occurring, and that is traders will oftentimes see an acceleration. Why? Because as you're running stops that are triggering that new 52-week high, think about all the different scans and all the different type of alerts that go off once we've hit a brand new one-year high. Oftentimes, since most market participants are momentum traders, it will entice more buying. So when I see a market run to a 52-week high and we don't see that acceleration, we don't see just a punch through but a decent amount of follow through, I really start to ask myself, how much momentum is there if a brand new 52-week high really couldn't entice a lot of traders? Now, I've talked about how Microsoft is in play here, so this is a good follow-up on yesterday's conversation, so kind of an ongoing conversation about the NAS, about Microsoft, and about the underlying market trend. What I want you to notice are the cues. Sure, Microsoft can help us excel through the 59.20 area. I also want you to think about the fact that 6,000 is the next big level. Don't underestimate those major 000, 00 kind of levels. Now, since we're in chop here, this is overbought, oversold. So now you know why I'm a little mistrustful. The underlying market is choppy. The 52-week high didn't attract an acceleration from that level, like a tripwire, and that means I'm going to retreat, literally, to shorter term time frames. That's going to be looking at the 60, the 30, the 15, the 5. Those time frames are where I'm going to be nimble. I can take advantage of the momentum or even the intraday trend higher, but if it rolls over, they're going to be there's a high level of sensory acuity here where that observation of the blue grab candles coming in and a red and a break of the wave and a loss of the intraday clarity, it's going to be quick. And I want that to be quick because I think we're particularly vulnerable up here at these highs. Now, I don't want you thinking that this is just the NQ and just this high. It's any market that's flirting with 52-week highs within the context of chop. It's any market that might have even punched up to a new high within the context of a trend, and you're asking yourself, how do I manage a trade like that? Can you apply the same psychology to the Euro US? Absolutely. Here's a market that's very clearly in an uptrend. But I'm going to do the same thing. I don't want to buy up here at the 116 handle, north of the 116. I'm going to look for an opportunity to do one of two things. Take advantage of a pullback on a shorter term intraday time frame, or try to take advantage of a little bit of profit taking and an intraday trend reversal. Notice I'm emphasizing the intraday and the nimble 30, 60-minute time frames, even 15 or 5. Because again, if we're wrong quick. We don't want to argue with markets that could be on the verge of really accelerating. So notice this works for both choppy and trending markets. Keep an eye on both these two markets, the NASDAQ and the Euro, are very much on our radar. And I'll follow up with some observations about how we might take some of these trades into next week in our next update.